Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey guys. All right, everybody, welcome back. Happy Tuesday to you. Thank you for being here. Market's still in turmoil, man. It is a wild market out there. The sell-off that we've seen in the indices here recently, it's up there with the speed of sell-off that we saw during COVID. Now, of course, COVID saw this same kind of trajectory, but it continued for much longer. Are we going to see something like that? Or is this starting to bottom out? I'll share my opinions as always. It's not financial advice. I could be dead wrong about whatever I talk about, but I'll do my best here as always to share my educated guess of what I think could be going on. So if we're talking about the S&P 500, the NASDAQ, the Dow Jones, all of them have been seriously beaten down here recently. Specifically, support just can't seem to hold anywhere. I've got my look at all of my levels have turned from green to red, right? So you had the big double top sold off, and there's been attempts, right? There's been many attempts by buyers to step in and push this market back up, but the uncertainty is just overwhelming, it seems, for this market. And I want to talk about what is happening because it's an interesting way that markets kind of behave, right? Markets trade off of uncertainty and fear of what could happen, not necessarily what is happening today. So if we take a look at the state of the US economy, and I want to show you some cool updates that we just added to the eco heat map on the Edgefinder, you can see we actually added a date column. This allows you to see how recent the data points that we discuss are actually showing. So you can see that in the last 7 days, we've had wage growth, unemployment rate data, jobless claims, we've had ADP, we'd have NFP, right? So we can see that we've had a lot of jobs data coming in. And relative to forecast, that data has mostly come in soft, right? Unemployment rate went up, JOLTS job openings, sorry, that wasn't in the last 7 days. ADP numbers did come in very light. NFP was just a very, very modest, slight miss number. So you've had a little bit of a miss there. But let's take a look at the actual column and say, are we actually truly seeing a recession number? Well, we recently got services PMIs, and it was still 53.5. Manufacturing PMIs at 50.3. GDP numbers, 2.3%. I mean, you can fear that a potential, the big R word, right? Recession is the name of the week. It's the word of the week, if you will, on Wall Street. But people are still getting pretty solid wage growth in the United States, below inflation, right? Or I'm sorry, above inflation. Inflation is at 3 for CPI, 3.5 for PPI, and 2.6 for PCE. It's not great, but it's not horrendous either. Right? So then you have jobs data coming in soft. So my point here is, are we seeing some softer data than expected? Yes, for sure. But are we seeing a recession warning everywhere? No. Let's be very clear. The US economy right now is not showing, oh yeah, no, we're nosediving into a recession. It's not showing that, right? It's hard to really pull together a whole bunch of evidence to show, look, the US economy is going into a recession. So then why, Nick, is the stock market selling off? Well, because the stock market's selling off because it's worried that maybe those economic data points will sour. They're saying, well, maybe with the tariffs, maybe with this, maybe with that, there's that possibility that we get a recession. And in my opinion, were we due for a sell-off? Yes. But I'm going to go ahead and make the claim. I'm flipping teams. I was bearish. I was cautious. I'm starting to get more and more bullish. There's a number of reasons that I can't ignore that tell me I have to start to be constructive here. And I have been constructive. I've already been buying the dip, and I'm looking to continue to buy the dip. But being on the cautious side saved me multiple percent in my account so far this year. But I don't think this is the end of times. I don't think we're going into a recession. And I think that the market's getting it wrong. I think the market's freaking out, and overly so. Look at the VIX. The VIX is at 28. People are scared. We can take a look at the put to call ratio. You guys know I look at this all the time. If you watch my channel, you know I am a put to call fanboy. Put to call is in extreme fear. What else is in extreme fear? The AAII Investor Sentiment Survey. Everybody is terrified. Don't you remember the old Warren Buffett expression, buy when there's blood in the streets? Of course, the market could go lower, and I'm not saying, oh, I know where the bottom is, right? I'm not going to try and call the bottom. And from a trading perspective, from a short-term perspective, this market still looks quite ugly in terms of price action and could go lower. But from a longer-term perspective, some of the stocks that I like personally, I'm going to look to start continuing to buy the dip on the markets. I just want to make that clear because I'm not out here. I know my YouTube thumbnails and titles have been really bombastic here recently, and give me a break. I am a YouTuber too. I trade, but I also am a YouTuber. So I'm trying to get, the most exposure on my videos where I think I'm doing my best to deliver some real value to the audience. So I have to kind of make my titles and thumbnails exciting to help stand out with all the other exciting thumbnails and titles out there. Your viewership is something I want to earn, and I want to keep it by giving you value every day. That is how I've, built my YouTube channel around. Anyways, I just want to be clear. I do think that we have now started the process of getting oversold, and that as this thing drifts lower, I am going to start to add shares in companies that I like. Okay. I just want to make that clear because I have been buying. I'm not saying I'm buying for the first time today. I've been buying before this. I bought some Amazon shares, Uber shares, Tesla shares, Nvidia shares. I've been buying. So I'm not saying I caught the bottom by any means. But if we continue to go lower, stocks are starting to look attractive to me. So that is my opinion on that. I am also, in a short-term basis, on a trading perspective, gold is still very strong. Gold for me, momentum looks excellent, right? So part of the reason I'm long gold, of course, the top setups algorithm giving me this bullish reading. Why is it getting a bullish reading? Well, that uncertainty in the short run, I would argue, should benefit gold, right? Gold is the safe haven that many investors are kind of looking for in these times where they're terrified. I think gold actually has the potential to shoot up to 3,000. I would not be surprised if we see that in the next 1 month. I could be wrong, right? We could completely tank and go the opposite way. But my opinion and my educated guess is I think that we're due to head back to those highs and to break out and go higher for gold. I think there's a lot of uncertainty, and I don't think that that's going away in the short term. Again, in the short term, stocks may look really ugly, and longer term, I might pick up some shares that I like. But from a trading perspective, I'm not looking to take a huge long position on the NASDAQ at these times. But I am willing to take a constructive long position on gold and silver and things that I like, and look for trades that look like this, where I can get a good risk reward, trail stops, and move them into profit. I do a little bit of both, right? I do position trading or long-term trading, and I also do short-term trading, swing trading on the daily chart. So I'm looking for more upside on gold here. I think that we could see it. I also think that yields could continue to come down, which is why I'm long TLT, which has been one of my better trades this year, just having parked a good bit of capital sitting in TLT here recently, which has held up much better than stocks. So bonds getting a little bit of a bid. The U.S. stock market opens up in 30 seconds, and man, has it been a roller coaster the last few weeks. You've had just, the market opens up, it tries to move higher, and sellers just rush in. So we'll see if we're going to stay in this kind of selling frenzy mode that we have. I'm about flat on the year personally. So with the NASDAQ down somewhere between 8% here on the year, I'm doing okay. I am looking to buy the dip on some tech stocks that I like. And, we'll see, for better or for worse, right? But yeah, we got stock market opening up here. We'll see, again, the opening bell. If there is some big volume either direction today, could be telling, could be really interesting. Again, like I said, I think that this has become a little bit stretched, right? You've hit some key levels of support, and some big selling has come in when we've broken those levels. Could we see a flush down to 5,400? I mean, we could, right? Frank and I were talking about that yesterday. We were talking about how, you scroll out here and you're looking at the S&P 500. We could even see a push down to like 5,200, where we saw that big August flush, right? So if this market really wants to flush and really, margin call a lot of investors, a lot of funds, a lot of traders, 5,200 could be in play. But yesterday, you had Trump acknowledging that, a recession is not off the table. And that is crazy for a president to kind of go out and say that. So I think that's what the market just freaked out on. That's why you had the 4%, 4.5% at one point movement on the day for the NASDAQ. Well, did we have 4.5? I guess we didn't. From the previous day's close, we had about a 4.5% peak to trough sell-off in the NASDAQ yesterday. It's ugly out there, man. A lot of stocks. And I mean, look at some of these stocks out there. Like, look at Robinhood. Robinhood yesterday was down 20%. Coinbase. Did you guys see Coinbase? Coinbase was down yesterday 17%. Tesla, my beloved Tesla, absolutely cratered from the high here. You can see down 55%. So again, if you're like me and you're looking at this as a potential buying opportunity long term, it's scary out there in the short run. It is hard to buy stocks when they're cratering. And you shouldn't, whoops, sorry, my phone just, or my, but again, I think that, right now, the point that I would make about this market is that this market is terrified of a possible recession that hasn't materialized anywhere in the data from what I'm seeing, right? We don't see recession woes. Now, again, you might say, well, look, but we're missing expectations. We're surprising to the downside, right? On a lot of these metrics. Yes, that's true. But the actual column doesn't show us in critical. If this was all red, I would hear you. I would say, yeah, we might be on a real problematic spot. But right now, inflation at 3%, 3.5 for PPI, 2.6. I mean, those are not great levels, but PMIs are good. Growth, GDP-wise, still good. There is expectations for GDP growth to slow, and some places are more terrified than others. Like the Atlanta GDP now, I think, has a negative expectancy for GDP growth year over year or quarter over quarter, which would be really fascinating. But I think the market is getting really terrified on speculating about tariffs. And in my opinion, that could be, I could be wrong, but I think that could be ultimately a pretty good buy the dip longer term perspective. Doesn't mean we're not done selling. We may see that 12%. We may see that 15% correction in the S&P 500. It actually would be really healthy. I would actually love to see that. As a long-term stock bull, I would absolutely love to buy and build positions on the way down to a 15% or greater pullback. I mean, a 20% pullback, is that possible? Absolutely, it's possible. It happens in markets. And if you have a disaster situation, you can even get 40% plus drawdowns on the S&P 500. But for those of us who are not leveraged and not all in betting on high risk stuff, that is an absolute blessing in disguise. In my opinion, you do what you want. But for me, I'm sitting on a good cash size position. I'm sitting in a situation in which I have a long-term horizon in the markets. I'm 28 years old. I have time to sit back and wait. So markets dropping. If you're under 50 years old and you have a long-term portfolio, stocks dropping are the best thing in the world. They should be. You should wake up every day. If you are somebody who is long-term focused in nature and you're under 50 years old, the stock market dropping is a blessing because it gives you that long-term opportunity, in my opinion, to get shares at extremely good prices. I think the tech companies that we all know and love, many of them will go on to double and triple and quadruple. Not all of them. Some of them will go to zero. But long term, I think there's a lot of great opportunities out there. And if we do continue to see bigger dips, I am thrilled about it. I'm happy to buy the dip longer term and get that opportunity, right? In the meantime, I know I'm talking a lot about long-term investment stuff, but I do shift my focus a little bit in markets when you're getting stock market sell-offs, because then I start looking at stocks a little bit more from like a buy and hold perspective. I don't like to buy stocks unless they're on sale, and I feel like they're actually starting to get on sale now. That could be a signal to someone out there. Oh, okay, Nick thinks stocks are going to bottom, then I'm going to sell. Do your thing. I get those comments all the time, and I find them kind of funny. But long term, I'm not looking to time the bottom for stocks that I like. But Uber, here's a couple stocks. Because I've been talking about it, here's a couple stocks that I like for the long term. Amazon, Google, ISRG, Tesla, Nvidia, Uber, Robinhood, American Express, PayPal, Palantir if it goes much lower, Fortinet, Meta, Airbnb, Salesforce, ServiceNow. These are companies that are really hot stocks that have gotten cratered here in recent times. By the way, here's Tesla trying to bounce here, up 3% today. S&P 500 down about 0.3. I know we've been very stock market focused here on the channel, and I know there's a lot of people who are like, Nick, look at gold. Nick, look at currencies. I will certainly do those things as well. But stocks are just quite interesting right now. Anyways, gold looking good. Gold's up almost 1% today. Love to see that. Love to see gold holding up on a day where stocks are down. A lot of my portfolio currently is in gold. So, here's the thing. I have two different mindsets when it comes to investing and when it comes to trading. From a trading perspective, I like to trade what's working right now. What's working right now? Silver and gold are working right now, right? The economic data missing expectations, trends to the upside, they look good for gold and silver, in my opinion, my perspective, and how I trade the markets. So I trade momentum. I trade with what's working in the short run. But from a long-term perspective, I'm much more, kind of contrarian, I suppose, like looking for opportunities of low prices. Anyways, couple public service announcements. I just put together, Chandler, James, myself, we put together channel memberships on the YouTube channel here. If you are somebody who has specific charts or questions that you would like me to answer on the live stream, we don't have any channel members, and this is totally up to you, but we've put together our channel memberships. If you have questions on the channel, I do my best to read chat, but I'm not very good at it. I have so much to go through in my head that I sometimes miss the chat. If you have burning questions and you really want me to take a second to answer them, I will prioritize your questions and your chart requests if you are a channel membership. For a couple dollars a month, you'll be supporting our work, and also you will fund our in-office coffee fund. That's the way we're expressing it. We go through a lot of coffee here at A1 Trading, and you'll get a couple things. You'll be able to help out the channel. You'll also be able to support our coffee fund, and I'll make sure to prioritize your questions. I know I will do my best to answer everyone's questions, but I'm not very good at chat. And I have a lot of stuff to go through when I'm on these channels. So if you have, if you'd like to become a channel member, you can check out the perks. You can join the channel. To become a channel member, maybe Chandler, you could find a link for us. I'm not sure if we have a link. The other way to do it is just go to my YouTube channel, and it's $9 a month or something like that, and you can become a channel member, and I will prioritize your questions. Do your thing. You don't have to. Like I said, I'm not hurt either ways, but if you have questions and want to prioritize your comments, I'm happy to do so with the channel membership. Okay, so yields bouncing here a little bit. Bitcoin's up today, 3.6%. I suppose that's kind of a hard thing to say up, really, when it's down from the peak still about 25.5%. At one point, though, it was down almost 30. So, Bitcoin having a little bit of a bounce back here. Stocks trying to hold their ground. The Nasdaq's green. Nasdaq is slightly green. Gold up about 1% here today. Looks solid still. Let's take a look at the dollar index. Dollar index is sitting at a key level, guys. Key level support. Can we hold it, or can sellers take control? I actually would have guessed. My guess would have seen this thing bouncing a little bit more. But with the dollar falling through, this would be good for metals, right? Weaker dollar, usually positive for gold and silver, copper, other things like that. But key level support being tested here today. And I think right now the dollar is subject to the same fears that the stock market is. People are assuming a recession could happen at a higher rate. And that fear is causing dollar weakness. It's causing stock market weakness. And I made my stand here today and gave you guys my opinion. My opinion is that the market is freaking out more than the data has given us something to work with, right? If you're somebody who thinks there's going to be a massive recession and that tariffs are going to ruin the world, hey, maybe you're right. But what I would argue is that the market is getting way ahead of itself, assuming that. And hear me out, if tariffs do not ruin the world and we don't see massive inflation spikes, which, by the way, in 2018, we saw little to no movement in inflation with tariffs. I'm not saying it was all sunshine and roses, because we did see GDP growth slow. We saw other economic issues, but inflation didn't go parabolic in 2018 when we had big tariffs on China. So what I think is happening right now, and this is my opinion, is I think the market is getting ahead of itself. We have the VIX up to 28, 29. The VIX is pricing massive movement. You know what that's telling you? That's telling you that the market thinks that the stock market, the S&P 500, is going to move by a factor of 28% in the next 1 year. That's the way to read. To me, that seems a little bit ambitious. So Nick, how do you trade around that then? Well, again, like I said, means for me that I'm looking to buy the dip constructively on stocks that I like long-term. From a short-term trading perspective, I still like gold. I also, from a short-term trading perspective, am selling a lot of options. I'm selling. So the stocks that I'm buying, I'm doing so in a creative way. I'm selling puts on stocks like Uber, Nvidia, right? Tesla. I'm selling puts on those names because the premium that you're getting right now for selling puts, or selling calls for that matter, is very high, right? And usually when everybody gets fearful and price out those massive movements in markets, usually what happens is those VIX spikes correct a little bit. And it's not a perfect system, because sometimes you think volatility has gotten to an extreme and then it reaches a new extreme. So it's not perfect by any means, but I think that the market is getting a little ahead of itself and freaking out more than what I would say is reasonable. We don't see, massive jobless claims week to week. So there's a lot of fear out there. And in my opinion, I'm going to stay steady. And I've been sitting patient with cash on the sidelines, and I'm going shopping. I'm not going all in. I'm not leveraging myself. I'm not being an idiot, but with the VIX at 28, with the market just in pandemonium, that's when I like to step in and buy stuff longer term. I don't like to chase it off of a cliff, which is what happened, right? It's a classic story. People buy the highs in stocks saying, it's going forever. And in a second, we have Alan joining the show. Alan has an expression that I'll quote. He's said a couple times in the show, when something's messed up, when what started as a trade turns into a long-term investment, quote unquote. You buy something too high and then you're stuck with it and you say, oh, well, I'm holding it for the long term. Well, I think what's happening now is a lot of people are either panic selling, getting margin called. They can't hold it forever. And for some of us who have been patient, who have not been chasing high tech, or high growth, exciting tech stocks, you may finally be getting an opportunity to load up on some shares at cheaper prices. That's my opinion. We'll see. I could be wrong. I could be wrong in the short run, see it get uglier first, which would be great because then I could actually really deploy some capital. I'm starting to dip my feet, happy to continue to add to this market if it were to go down on a bigger scale. Because long term, I think it's going higher. And I think people are really, really scared right now. But keyword is long term. It could go down for another 3 months. It could go down for another year. I would be buying that dip. These are the moments where I feel like we're on like a battlefield and we're about to like charge the enemy. We're about to charge them out. These are the moments you got to be brave in markets. I'm not saying necessarily you should go out and buy stocks. I'm just saying that you have to stick to your conviction in these moments and you have to stay steady. You can't let headlines freak you out, cause you to panic sell or make a massive short bet on the stock market after it's had a big sell off. Like, you just need to be careful and think as logically and rationally as you can in these times. Easier said than done. It's so much easier said than done to buy low and sell high. In theory, it's easy. In actuality, it's very difficult. It's very hard to stay brave and stay steady when you go into a drawdown or you go into a market that looks like this. VIX at 28 is no joke for a lot of people. A lot of you guys, and I'm not shaming you because I experience this. Most new traders do. Most traders get used to these types of environments where you have low VIX, market's not moving all that much, and then one day you wake up and it's moving like a monster, and you don't know what to do. So I think people are getting a little bit of a VIX wake up call here recently, and it's probably challenging some traders out there. And you'll either earn your stripes here or you'll quit. So make your decision. And if you're here with us for the long term, then welcome to the pain train. That's all I'm going to say. Okay, so also just wanted to mention that we had a bunch of people join us yesterday in the Discord, which is exciting. Welcome to new members. If you're not a member already and you would like to be, you can get access to every trade that I am taking inside of our Discord community. So let me just show you this really quick. So within the Discord, you can see all the trades that I'm taking, whether it is Forex positions, whether it is commodity trades, indices, ETFs, stocks, and options. I trade a little bit of everything. We also have Frank in here sharing his ideas. He's building a portfolio right now, which I actually think is, I've mentioned this earlier, stocks are like top of mind for me. So I'm keeping an eye. Frank and I are talking stocks that we're looking at for the long term. Chris Pulver's also in here, and then Ivan from the show as well. So if you are not already inside of the Discord and you would like to become a member with us, you can see every trade alert that we send. It goes to your phone. You get notified entries, exits, why the trade was taken, screenshots behind the trade. All of it gets sent directly to your phone in real time. So if that's something that you would benefit from, if you feel like you would learn a lot from that, and that would be something of use to you, consider joining us, because right now we are doing a 35% off discount. Here's how you can take advantage of the discount. We'll drop a link here in the chat as we speak to where you can speak directly to a member of our support team. There it is. Hit that link, send them a direct message, let them know you saw the stream where you can get 35% off, and we'll honor that and get you a huge discount on any of our memberships. The other way you can check this out is head over to a1trading.com/VIP. a1trading.com/VIP. Check it out. Come join us. Get serious with your trading, and hope to see some of you guys in there. Okay, up next, we got Alan Perez. Hey, I met Alan on Saturday in person. He's been in the stream for a long time. He came to an in-person event, and it was a lot of fun. Oanda put on something for us, and we had a great time at the Atlanta United New York Red Bulls event in Atlanta. It was a great time, and if you didn't make it to that one and you live in the Southeast or would be willing to make a trip, I can't get ahead of myself, but I do think there's a possibility we'll do more of those sorts of things in the future. All right, up next, Alan Perez taking over the show. Stay tuned. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Good morning, everybody. I hope you guys, or good afternoon, good evening, wherever you guys are watching from. I hope you guys can hear me and see me okay. I wanted to touch on my positioning. I am still pretty flat in FX. It seems like the moves have moved as far as, directions when you're looking at things like the euro or the dollar crosses. It seems like they have all moved, and it's hard to really pick a top when you're like thinking about shorting the euro or buying the dollar, because the VIX is still up. The VIX has been trending up, meaning that there are more moves to come with a lot of velocity here, and nothing really has changed. You have Europe committing to $800 billion worth of defense spending, and then you have Trump actually endorsing it, saying that, yeah, they do need to be a little bit more military dependent. And so it seems like that has been taking the front seat as far as all this strength going. Nick mentioned too already something I was going to say, that Trump is actively saying, yeah, we could be in a recession, or that's a very possibility, which is something that I would think a president would say at the very last minute if possible. So that definitely caused a lot of fear in the markets, and that's why we see these sell-offs. I was talking to my little brother, and he asked me yesterday, like, should I just buy the market? It's been selling off. What's going on? And I said, if you're going to buy the market, make sure you're willing to buy it even lower, because nothing has really changed. Nothing new has came out that supports a market reversal yet. We're still waiting on very important news or figures to come out that could help, push us back to, like a pivot. And so I basically told him, don't put all your eggs in one basket. If you're leveraged, make sure that you are so small that you are willing to go ahead and add at lower prices, because once you're in the trade, you're in the trade. And if we were talking about leverage, which is where I would say most of us are, including myself or other people in the chat here, if you're leveraged, you can always add on to the position, right? But if you take it off, that means you're taking a loss, right? So be willing to add the position. If you are in a trade and it's going in your favor and it's clearly pivoting, you can add to that position. But the worst thing to do is go heavy initially and, be in drawdown, and now you can't add anymore because you're about to get stopped out, or the P&L is so painful that it makes you do erratic stuff. So that's my take on that. Yeah, that's the exact same response except from Nick. I am getting crushed by the dollar yen bounce. Are you short or long? Yeah, I do use financial juice. That's my preferred method of getting the news and everything like that. It's pretty quick. I got it on sale. I forgot how much it was, but I have the pro version, and so you get news pretty quickly. I think it's very helpful. It was very affordable. Yeah, ASAP. You can always add to a position, but it's really hard to take off, especially when you're levered. If you're getting in a position and it starts going against you, and your initial size was, pretty heavy, then, the P&L gets to you if you add to the position and it continues going against you, it can make the situation worse. So in moments like these, when you have basically nothing has changed fundamentally, you have the VIX still up, signaling that there's more movement to come, then if you're going to enter the market on leverage, you definitely need to go ahead and be a little bit careful. Worst case scenario, you just don't make that much money. But in an environment like this, if you don't have the experience or the I guess the buying power, willingness to eat some drawdown, you have to take the safer route until things change. Yeah, I can look at those. Seems like all of the Swiss crosses. The Swiss is getting strong here, so that's why you could see some of those movements. Like my Swiss yen position has retraced on me a little bit, but that one's a more long-term play, so that's fine. I don't mind that. Yeah. So one thing I would look at, I'm no longer looking. So now that this has changed, right? My previous bias on the market was, and this is basically where the majority of my income was coming from for like the last 4 months, it was shorting the euro and then buying dollar crosses like dollar Swiss, dollar CAD. That was the trend for a while, and that's how I was doing it. And so now that has clearly shifted, and it seems like the fundamentals have shifted in more in favor for the euro. So when you're getting levels like these, right, you could see a pullback because now I am more bullish longer term or in midterm. I'm not going to short pullbacks. Instead, I'm going to let the pullbacks happen and then buy on those pullbacks. That way I'm going still with the trend. The COT and everything was in favor of this. So, if you go down into the lower time frames, like the 4 hour or the 1 hour here, for all of these markets, really, you get these brief pullbacks and then it keeps, chugging higher. I would say that as well for the S&P and the indices. If we kind of just look at it, every single time by noon, any bullish momentum gets faded back down. You see here by 2 p.m., this thing has faded. Over here by 1 p.m., it starts to fade down. And you can see that that's the case right now. So it's really tricky because in the morning you will see, a candle that looks like, oh, look, it looks like a hammer candle or something. And it could be a reversal. That's when you have to be careful because those moves get faded really quickly. Alan, JOLTS. Oh yeah, JOLTS is coming out. The multi-view. What do you mean shadow by the multi-view? Oh, I see what you're talking about. You want to see the news populate, maybe? Oh, Nate. Okay, I see what you're talking about. The eight. I think I have a setting like that. Multiple markets. No, I can do it real quickly though. Watch this. Which one does he do? This one. Oh my God, this chart is sloppy. Okay, I'm gonna go to swing. I know I have 2 minutes, guys. And then we're gonna put the S&P at the top. We're gonna put the NASDAQ in the middle. We're gonna keep the euro there. Actually, we can keep the dollar at the top right there. We can put gold. I know you guys love gold. We can put Bitcoin there. And then I'll put the anti-dollar at the bottom right here. So this is, and then we'll go, I know you guys like, I'll go to a 1 hour for all of them. Yeah, it seems like that's what it is for everybody. All right, cool. That's the multiple view. Yeah, I know, under pressure. I gotta keep you guys happy. And then I'll put the actual figure here. We got 54 seconds. If it comes, in line with expectations, then, I don't see nothing happening. But I understand that most of you guys here are like very short-term traders. So, on the 5 minute or the 1 minute or whatever, it may seem like something is crashing or not. But that's when a lot of the noise happens. When these figures happen and they come in line with expectations and nothing, really happens. But if there's a big miss or a big surprise, then that's when people start repositioning. And that's why you see these erratic movements right off of a news release. But we'll see what happens. We have 9 seconds to go. What are my expectations? I mean, I would think, let's see. $7.7, it beat. Nothing really happening though. I don't see any big wicks. I would maybe, if we're on a very small time frame, I could see some chop, but yeah, it was a good surprise, but we'll see how long it lasts, right? Because we need to see if the market is going to really digest that in a good way, or if it's going to ignore it, right? Like I remember, what was it? The last CPI report, guys. It was a tick up in inflation, but the dollar declined right after that. So the market decided not to really take that into consideration. And there's times where certain markets, no matter what the news release is going to be, it's just going to ignore it, and it's waiting for something else. Jack, I look at a few pairs, mostly the majors. I've been in the Swiss yen position, which is something that's a little bit not that I usually do. But as far as like equity indices and the commodity side of things, I don't trade those. So my broker is Oanda, and that's where all of my capital is allocated at. And so I can't trade those products. But Jack, to kind of go further into that, I'm pretty flat. Like I'm not really actively looking to add trades. A lot of it is because I'm going to be pretty busy. I have family coming over, which is, I'm going to say, is a blessing in disguise, because, this market is a little erratic right now. So I'm just going to use that time to, I'm still going to monitor. I'm still going to keep up with what's going on. Like I know we have CPI, I think tomorrow, if I'm not mistaken. Yeah, we have CPI tomorrow. I'm still going to monitor those things, but I'm not going to be actively looking to be involved in the markets, just because I know how it can get. From my experience, I'll give you guys a story about, the last August sell-off that we had. I got burnt pretty badly on that one. Initially, because I remember, dollar yen was approaching, I believe it was the 160 levels, and we were, there was talks about interventions and things like that. And so that caused a bit of a sell-off. And then we had like a brief pullback, or it looked like a pullback. And then it continued to decline further. So whenever, we got that pullback and I thought that was, the bottom of it, I went ahead and bought there, and I got burnt pretty quickly. So I lost a good chunk of money there. And so I'm being cautious. I'm trying to, prevent that again. And that event, from the beginning to end, if we're referencing the S&P, that was a 21-day move here. So we kind of look at what we're at here. We are at 20 days. So actually, maybe we could see a bit of a stop there. But when I reference the VIX, it doesn't seem like anything's going to stop, like today or tomorrow. Yeah, at least PPI, basically growth and inflation is what the market's really looking at. We've been missing. We haven't been like bad, but we've been missing the expectation. Okay, I see a couple pound US dollars here. If I'm referencing the Edgefinder, I believe the pound is very bullish. So shorts, I wouldn't think are, I don't know, the smartest thing to do maybe. Because if you're playing a short, I would assume you're mostly playing, the calling the top. Let's see here. Let me go back to like the 4 hour. That's where I like to do this. Short GU at 29.36, which is kind of where we're at. Stop loss at 29.5, which you're pretty much targeting the highs there. And any thoughts? Bull case for the dollar. So this is a tricky one because the Edgefinder is pointing that this thing is bullish. Actually, it's at the very top of the list. So going short on the pound would be going against the grain, in my opinion. Now, I'm not saying we can't get a pullback, retest, and then continue higher. So if that's what you're doing, then it's a possibility. As long as you're being careful, then I don't see. One thing we talked about in Atlanta, which by the way, I went to Atlanta to see Nick and Oanda and the other people of the news. We talked about how we could have two different biases and we can, traders can both make money. If I'm going long and you're going short, but I'm swinging the thing long and you're going to scalp it short, there's a possibility that we can both make money. So I'm not trying to say, ditch the trade or anything like that. It's a possibility that you can go ahead and profit from it. If you're looking for like the quick pullback and you're mindful that, there's a very strong possibility that buyers can be at support and you go ahead and chug higher, then that, go for it if it works for you. Australian Swiss. I think I saw that on Edgefinder. I think I was eyeballing that. Let's see, Australian Swiss. Bearish. And I believe you wanted to buy it. So we are at the bottom here, but we have to keep in mind this right here. This is not something to be ignored. You have all this. If you go down to the lower time frames, if it's another big wick, you could just fill that wick. Yeah. Yeah. You could buy it with the expectation to buy lower. I only say that because the Edgefinder is pointing it that it's bearish. So, be careful with it. If we're seeing the actually, you know what? I don't know, because the Swiss has been really strong lately, and I'm just gonna give you my 2 cents here. The Swiss has been quite strong. Australia, given that it's a very commodity-driven asset, you have oil just plummeting lower, and that's why you could be seeing this downtrend here, which doesn't help the case. If you see, things like oil continuing to drop, and you have the Swiss continuing to stay where it's at, appreciate, then yeah, you could get a better buying opportunity there. Yeah, stay nimble. Dollar CAD on buy. I was dollar CAD. I was buying dollar CAD, not recently, but if you see, it's been in this range here. We're at the top of the range, so that could be something mindful. 1, 2, 3, 4, 5, 6 times where we've hit this level, we kind of retrace backwards a little bit. So if you are buying at the top here, then your expectation could be to be hitting these levels. Just be a little bit careful. But I know that dollar Canadian is very lucrative because every time Trump says something about tariffs, that thing tends to move pretty good. You're welcome, man. My pleasure. I'd like to know too, the chat. Are you guys also, just being cautious, or are you guys taking advantage of the volatility? Uh, I feel like I missed the move. For me, like if the move has been made, I'm not gonna chase price. I personally get a little bit fearful and a little bit risk off when that happens. But I'm curious to see if you guys are, taking advantage of the volatility, or how are you guys approaching it? You love volatility? If you're on the right side, it could be very, very, very good. Trend tracker, I'll look at pound Swiss, and then while I do that, I'll answer Kittis. I think I like the yen. They're actively trying to hike rates. Like that's what that's what they want to do. And the Swiss is a very neutral asset. It's a safe haven asset. I think they're at zero point 0.5 rate, but they're trying to go neutral at the zero. Um, Kittis, you said it yourself. If institutional players are buying the asset, then that's a very good sign, that they are also in line with what you're thinking. Now, that doesn't mean that you can not experience some pullbacks and stuff like that. Like right now, we're experiencing some pullbacks here. This was where I just added. So my second add is right here, a little bit at break even, but that's fine. Long term, I think if we reach this level here, this previous support, I would like to see what it does. If it rejects it entirely and we start chugging higher, then maybe I can trail stops. But my idea for the Swiss yen is to just hold it on, because fundamentally what's going to happen is that there's going to be a stronger yen rate versus a Swiss rate. And so that's going to not only be good as far as the move is going to be fundamentally strong, but it's also going to make sense to hold the trade, because now you're going to be getting paid a little bit for that trade. Jack, they're not hiking rates till May, but the market is very forward looking, and usually the event gets priced in. That's why you'll see, like, for the euro, that would be a good example. The euro was appreciating right before they were going to cut the rates. And when they cut the rates, it continued higher. That's because the move has been priced in prior to the rate cut. And that's usually the case with most major news releases, is that the move is priced in, and then you go ahead and now if there's a miss or a surprise, then that's when you can see those crazy moves. But let me go back to the I think it was pound Swiss they wanted me to look at. And I think I have 3 minutes here, guys, because I believe we have either Nick or Chris coming back on. Pound Swiss, pound is strong. We see that. The Swiss is also kind of strong, but I could see longer term, the pound has the rate divergence for the pound and the Swiss is very wide. This could be if I'd like to know if you already got in. If you got in at a lower price, like somewhere around this level, that I'll mark up for you. If you got in somewhere here, then I think you're pretty gravy, my friend. I think you have so much room to wait out and eat any drawdowns and stuff like that. Pound Australian. Oh, that's the one you guys wanted. Pound Australian. Pound Australian, I could see it being very bullish. Yeah, look at that. The pound's very strong right now. Australia is pretty weak off the backs of, just their economy and oil continuing to chug lower. If you're looking left, the next thing here, the target range would be this 2007 area. But you're already at the highs, so I don't know if buying at these highs would be, you have to consider your expected value. If you're buying the highs here, and your target would be the next level, which is at we'll just call it the 208 level here. 208. But then you have all this potential downside, and this is just where the support is right here. Then your risk to reward is actually negative. You know what I mean? So the move has happened, but that doesn't mean a pullback can't happen. Like a pullback, a test, and then a continuation. And then if that does happen, then your risk to reward will be 4-1. So that's what I would look for. Be patient. That's one thing that I had to really exercise is, be patient. It's way better to not make any money than to lose money. And the worst thing of all is, let's say you are really keen on this trade right here. If this thing comes all the way down, takes you out, and then continues higher, how bad is that going to feel? Knowing that you were right, but all we had to do was just be a little bit patient. So I think who mentioned the pound Australian? Elvin, I think you're on the right track. I think you could be very much right on the trade, but let's be a little bit patient on that one. Australian US dollar sells. I don't know. The Australian dollar has been pretty weak relative to other ones, like when the euro and pound are appreciating rapidly. The Australian and the New Zealand tend to kind of be lagging a little bit. But you are going counter trend, anything, against the dollar at the moment. So I'd be very careful with that. Yeah, you want to catch the right fish. When you go fishing, you wait a long time to catch the big fish, but it's worth it. Am I stuck again? Yeah, catching the big fish takes a long time when you're going fishing. And in the meantime, you could catch a lot of smaller fish. But if you just be patient, you can really catch that big fish. I hope you guys are not trolling me, because I'm a little traumatized with my friggin' PC and, when I go blank here. Follow the trend. The euro strength recently, when it really took off, follow the trend, was off of the backs of Europe's commitment to invest $800 billion. I think it was 500 or 800 in that range to their defense spending. Now that shows that they want to be military dependent. They don't want to depend on us anymore, it seems like. And our current, Trump went ahead and endorsed that and promoted that. And so what that does for the economy is that it is a big spend, right? It's not something lightly, but it could, bring a lot of growth and what's the word I'm looking for? Growth and, dang, I had the word in mind. Participation in the market, or in their labor market. Data talks. What fundamentals do you think are most important when it comes to other currencies other than the US dollar? I would say the most important fundamentals. I'm just gonna use the Edgefinder, because that's literally what I say. Fundamentals for any currency. When you're thinking of currencies, COT is a big thing. The GDP for the country, their growth sector is very important. Their inflation rate, which would be things like CPI, PCE, or the actual things that measure inflation, their employment, and interest rates. Those right there are the biggest things that really move a rate longer term or in the short term, really. But besides those, the only other thing that would influence a currency rate, to the point where it can cause a big trend, would something be very like geopolitic tension, or a big fiscal commitment like what Europe just did and went ahead and they want to commit 800 yards to defense spending. That right there are the main things. But the beauty is you have this tool that gives you most of the things that are relevant to a currency's movement. And all you have to do is use this thing that consolidates everything, does all the work for you, and then just read the news. Have like a financial juice, like what I do. I have my financial juice right here. News releases comes out, and I read stories as they go. Or what Forex Factory or any other news outlet you can use. But most of the heavy lifting is done by the Edgefinder. Bashi, I don't know if I'm going to make an IG or an X. I mean, I don't really see a reason for it. I like being off the grid. It's pretty cool. When I was on like Instagram and stuff like that, it consumed a lot of my time. Charlie, what is the Edgefinder? Is it free? It's my first time hearing about it. It's not free, but there are ways you can get it for free if you don't want to pay. Right now it's on sale. It's 30 or 35% off. So it's at a discount right now. So you could take advantage of that. But if you do not want to pay like a fee or anything, there are other ways to get it free. I think A1 Trading has partnerships with like brokers and things like that, to where like if you trade with them or meet some sort of requirements, you can get the Edgefinder for free. If I were you, I'd reach out to the team here, and they'll probably help you sort something out. If it's not free, it'll be definitely cheaper than what it's always been.
Hey, Alan.
Hey, how you doing?
Guys, I met Alan in person over the weekend. He's a cool guy.
Yeah,
He came all the way to Georgia from Chicago. That was awesome.
It was so worth it, man. It was really worth it. I had a good time. I had so much fun that I had no idea what the score was until the game ended.
Yeah, I was a little jarred that the game just sort of stopped. Like nobody won. It was a tie. And then everyone just sort of walked away. I was like, oh, it's over. Okay. What Alan was just saying, yeah, there is a way to get the Edgefinder for free. We have a partnership with ACAP. I'll drop their link in here. If you deposit a certain amount of money with ACAP, you can get the Edgefinder. They'll pay for it for you if you deposit. I forget the specific amount, so you'll just have to click the link because I don't want to say it wrong. But guys, I'm going to put Alan's channel in the chat here. Make sure to go subscribe to him. He's been doing a lot of stuff with us lately, and it's been really cool. But Alan, I guess we'll see you next Tuesday, right?
Next Tuesday, yep.
All right, because we're bringing Chris Pulver in, so it was great seeing you again. And we're going to play a quick break, and Chris Pulver will be taking over the show right after this.
All right, bye everyone.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Interesting factoids coming into today's session. So yesterday, we have one of the largest put option volumes in history, which was interesting. We also have what is this? The fourth largest volume day since 2023. When that happened previously, we actually saw some bottoms. That would have been back in, let me see if I can zoom in. That was the April bottom of 2024, the August bottom of 2024, and now. So the previous one before that was September, October of 2023 when you had a correction. So again, I'm looking at some short-term plays. Short-term plays where I think we have at least the market responding a little bit to a move to the upside. This is a trade I'm trying to close out for a credit. I've got a bull put spread, or I'm sorry, a bear put spread here and a bull call spread here. I'm trying to close this out for a max $2. My pending order is about $1.85. I still have another week of expiration, but I'm looking to take about a 100% gain on that position. I only paid like 98 cents. I'm trying to close that out for like $1.85, $1.90. So that's when hopefully going to just settle in and get me filled. We are noticing, I'm noticing some wider bid mid ask prices in the options market, which is not super awesome, but it's just part of the game. We got a couple trades running today. Notably on the SPX, things are relatively calm. Not a ton of news today. We had JOLTS job openings this morning. That's about it. Lows from yesterday. I got pretty lucky yesterday on a 3-for-3 trade where I had a trade in the morning that made some money, trade in the afternoon that made some money, and what is the other trade that I did? Oh yeah, it was a longer duration trade that I closed out for a quick win. So anyway, I'm looking to see if this level today, 55.30, will hold. Hopefully it will. High of the day, that would be about a 100-point move to the downside. That's clearly not safe. Like if the market's going to sell off and make a fresh low, I've got a broke wing butterfly here today, but I'm hoping that we kind of put in, a low that's maybe market can like test it and maybe rally off of it a little bit. We have CPI data coming out tomorrow. See if the market's going to be at all excited about CPI data tomorrow. Maybe, maybe not. Forecast CPI is 2.9 versus previous 3.0 for the year-over-year headline CPI. We took a look at this from the Bloomberg calendar, which is what I'm paying a little bit more attention to this week. If you just go 12th and 13th. So the data for tomorrow morning, year-over-year headline CPI 2.9%, so expected to be a 1/10 increase or 1/10 improvement. And then the core CPI, previous was 3.3, forecasted for 3.2. If the market's going to show a reasonable move, Intel back down to 19. Okay, fine. I got out of this trade for profit. Okay, that's fine. I'm out of Intel. Let this one just hopefully reset. This could be a good opportunity in the medium to long term. We had a nice little rally here. I do have a pending order. I might just put this back around like 15 bucks on Intel. So if we settle into these levels, anything below like $17, $15, I think this is a pretty good buy opportunity on Intel. So keep a close eye on that one. Let me set a chart alarm at 16. All right, watching a couple trades on SPX today. See if that will just, more time is needed. I'm down about 20 cents on the trade right now. All right, so blood in the street yesterday. I mean, it was bloodbath city. This is the heat map from yesterday's close. Almost 80% of stocks declining. It was a pretty painful day, and you can certainly feel it. It was interesting to see Berkshire Hathaway had a green day, JP Morgan, Morgan Stanley, Goldman Sachs. There's a few sprinkled in, obviously, like, you got 7,000 stocks. They're not all going to be red, but 80% were red. And the S&P was down. This actually was an earnings multiple, so it was a pretty ugly day yesterday. But some of the big levels that I've been talking about the last few weeks, I still am somewhat optimistic that this market is going to find a low sooner than later. And so that low is hopefully anytime. April, August, this area, maybe CPI data tomorrow is enough to get this market excited about something. I'm a little skeptical of the rally to the upside as far as how high we go. I don't know if we get all the way to all-time highs. In fact, I think we don't. But I think even a little relief rally where this may come down and poke and maybe get right at that 10% level. I'm really curious how this plays out, like to the percent. If we go high to low, we're right around 9.4% on the SPY or S&P. So do we push a little bit lower? I mean, what's another 0.6%? If we get exactly to around 10%, that puts us around this 55, like 30 area, 55.20 area. I've said that 57 to 5,500 is my window to be buying for the next couple of weeks for some short-term gains. So I'm looking for a bounce in the near term. What I'm going to also look for is on a shorter time frame. If I put in a couple of moving averages, if we start to get some up days in the near future, then I'm probably just going to look at doing some bull put spreads below some automated trend lines and just trying to grab some short-term income. One thing I'm gonna attempt to do is trade through this in the near term as well as be positioned for the medium to long term. My plan, and I talked about this a little bit yesterday, would be if we get a rally to the upside, I will be de-risking. Okay, so a de-risk. What that means to me is any trades that I am not enjoying, any trades that have been upside down and causing me a little bit more pain than what I'm wanting to see, that I'll be getting rid of those trades at small wins, break evens, and small losses. All right, so I'm going to limit some of my exposure just because here I still think there's a lot of uncertainty. So if we come back up and we kind of balance out this fall, we kind of balance it out, I don't know if we're going higher or lower. And so rather than taking on, more risk and still getting flushed out to a fresh low, if that is the case, I don't want to have heavy amounts of risk going into like a second wave lower. That makes sense. So if we see a short-term rally, I'm looking to de-risk. That might entail taking some losses, probably washing some good with some bad, but getting rid of some of the exposure and kind of making my portfolio a little bit more market neutral. All right. But I'm looking for that to come, relatively soon. We just crossed through the 200 moving averages, some pretty good technical support. We've had some capitulation type feels, like yesterday it felt like capitulation a little bit since it just, opened lower and slid lower all day. XSP, same type of thing. That's why I put in here this 585 to 600 window is kind of a risk relief rally. S&P, SPY, same thing. Watching to see what this percentage looks like. So high on the SPY, down about 9.4%. If it drips down to like that 10% level and then pulls back, that would be fine. RSP's equal weight, we're actually back down to the lows from early in the year. Interesting. I do have a symmetry measurement. I might end up picking up some more RSP. Discount wise, if we come to some fresh lows, that would be a 10+% discount on RSP. Let me see, check this. So 2022, or even this pullback in 2023, this pullback was around 24%. Okay, that was that bear market? No, that was 2020. Yeah, that's okay. So bear market 2022, about 23, 20. I mean, it's about the same. So I don't see it necessarily outperforming. But if we're at a 10% discount, it's not a bad spot. So anyway, I've got some positions in RSP. I think equal weight could perform as well, maybe even a little bit better than SPY this year, just because you're taking out the concentration with Mag 7. Futures market, I did close out some hedges. So I had an MES hedge here that I did close out for profit. This one I closed out today. So this trade was a $93 debit. And I closed it for $140 today. So that trade's out. And I closed out also a 5,000 put, which is a way out of the money put. This was like dirt cheap, way out of the money put here. And with the velocity that we've seen over this correction, I turned a 22.75 debit into a 52.50 credit. So overall, pretty good gain on that one. So that would be 52.50 minus 22.75. That's 130% on that hedge. So close out a couple of hedges in addition to some of the other ones I had running early in the year when we were up to these highs. I did some bear put spreads, closed those out for some profit. Overall, the hedges have been helpful. I'm not saying they were perfect because I'm pretty much flat now for the year, which is not cool at all. But the hedges are there to at least alleviate some of that. And if we do see some recovery, then it's easier to get back ahead with about $30,000 in hedges. But it wasn't enough to just protect the entire portfolio, but that's okay. So I'll continue to trade through it. I am interested in the Qs, but not as much. I think SPY might be a slightly easier index to trade. The Dow, I did actually buy some shares this morning of the Dow. I bought some shares. Let me see, actually update that. So DIA, this is, got to check my account here. So this is 6746. Adding shares. SPY. So I bought a chunk right here. I bought a chunk of the SPY at 559.38. 559.38. And the Dow, so 559.38 was my fill on the SPY, and the Dow 418.10. Okay, this is strictly just a cash account. So I will be looking for any type of bounce. If we have any type of bounce, then probably taking some short-term profits. In the Dow, we come up to say 430 to 435. Turn that into a little chunk of profit. I'm good with that one. And then on the SPY, we come back to this 580 to 590 window. Looking to take some profit there as well. Okay, watching some levels. Hopefully we're not making like fresh lows without having a bounce today. If we stay relatively choppy, that would be fantastic. Let me see where my SPX is at this morning. Okay, so my 265 credit still trading for about break even. I just need some more time. Come on, man, just get my freaking profit target, would you? Keep this one running to 215 today. I'll keep checking on this one. And then I've got a broken wing butterfly that is a 55.30 level right here. Hopefully price will respond a little bit to the upside. Come on, market makers, do your job. All right, economic calendar for tomorrow, like we mentioned. Markets expecting slight improvements in core CPI year over year and headline CPI year over year. I talked about this third-party reading, Truflation, and it's lower than what we had back in September. So when the Fed pivoted hard, the market pivoted hard, the bond market went nuts. The concern is that we have a pretty nasty slowdown ahead. Okay, I mean, let's go inflation. And we're at fresh lows on the day. SPX, you piece of crap. All right, let's see what happens. Dow, sprinkling in some fresh lows. I'll go back to SPX on this one. Dow, just below the 200 moving average. Looking to scoop up some, or if we come back down to like $400, I'm good with that. I did put on some trades earlier this week I think it was either last week, Thursday, or on Monday. I put in this trade on the DIA where if I did take any ownership, I would own the Dow at 383. I actually like that trade quite a bit. Russell, not touching the Russell at all. I do have some trades running, threatened here around 190 or 190. This is out to March. If the Russell responds in any way, shape, or form to past resistance becoming support, it'd certainly be nice to see this little pattern playing out. So a high, low, lower, high, lower, low. If we respond with anything there, then this trade just becomes an income trade. If past resistance becomes support, I'd like to see a little bounce. Are we in 20% land for Russell? Pretty close, 18.9% on the Russell from top to bottom so far, peak to trough. So maybe we carve out a 19 to 20% correction. IWD is your Russell 1000. You got your Russell growth looking like garbage right now. You got your Russell value that's also just falling pretty aggressively. Cheap enough, yes, I like it, but man, I want to do a little bit more digging on what are these top 200s, how profitable are they, and that would be probably the only way I'd diversify into small caps would be something like the top 10% of small caps, so they just have a little bit more opportunity to be profitable, as opposed to what scares me about the Russell is about 70% of companies are not making money. All right, are we having another freaking capitulation move today? Like, come the heck on, man. Yesterday was ridiculous enough. This market gapped over 1% lower and slid from, we had a 3.5% slide yesterday before we ended up ripping up, it's not a rip, but that's a relief towards the last like 20, 30 minutes of trading. All right, hopefully today is just a poke of the lows. Market can pull back and just, make traders a little bit nervous, but don't turn red. Don't turn super red on the day. All I'm saying is just don't be a turd, market. I think we've dealt with you long enough for the last couple of weeks. We've had, now this is 4 weeks of selling. Go back to the charts here. We have week 1, 2, 3, and here's 4. Doesn't seem like a lot of fun to watch the market just bleed, 9 to 12% to the downside with just, a little bit of chop, but mostly just big sell days. But that's what bear markets feel like, and we're going to see, how much damage is being done. Dollar index. Let me go to a different chart here. SPX. Let's go DXY. What would you want to see right now for US dollar strength? I don't want to see any dollar strength. I don't think we're going to have any dollar strength. Technically speaking, would you call dollar strength in this area? This is such a random spot to be like, is this thing going to turn? I don't see that at all. If I'm seeing dollar strength, I want to see this dollar down here. And I don't know if I'm going to get that trade. I don't know if this, this is a very inefficient decline in the dollar. And the euro has really been the best currency to trade against the dollar. It's just been straight up once we had that surge above 106. But this is such a random spot to say, I want to see dollar strength. I don't think we're going to get it. So I wouldn't mind seeing the dollar settle back into these levels and then see if this area offers up some support. So, what a ridiculous move, by the way. Coming up here to, 110, I thought we had some pretty good structure here to say, all right, well, I guess the pain trade would be this rips up, we pull back in base, and then we have more dollar strength. And that, brings about some really difficult situations where the dollar is so much stronger. But man, we're seeing super weak dollar. So I'd say let it do its thing. If this is going to pull back and sell, there's maybe some support around this 101 to 100 handle. But I straight up missed it. This trade for me was, I was looking for support and a trend line break. I didn't get it, so I didn't force any trades in the dollar, and it's fine. New Zealand dollar still back to break even. Aussie dollar I closed out for profit. Dollar Swiss continues to drop, which I'm okay with. I might load back under the dollar Swiss positions here. So if we come to like 86 down to 8,400, I'm going to be looking to sprinkle in some more dollar Swiss longs and try to range trade this thing. If we go dollar yen, I don't want to trade dollar yen short because I don't want to hold the negative swap. But this does look like after breaking this low, this could be setting up a topping pattern. So I'm trading this still through either Japanese yen futures or FXY, just holding shares long. Currency strength. Yesterday was Japanese yen rising to the top. Come on, browser. So yesterday we had Japanese yen rising to the top. Today we have euro on top. Japanese yen weak now, going back to baseline. Canada is getting weaker. So euro still getting a little nudge from the weaker dollar. So I just look, yen pairs. Let me take a look at the other yen crosses. Okay. Aussie yen. Be on the lookout for this. There's no confirmation for it yet, but be on the lookout for this in the currency market. We have a flash crash low here. If you get a trend line break, there's no reason to force this trade. But if you're willing to take a little bit of a bite down here with some small trades, that would be my risk. I'm looking for confirmation. So I've got my anticipation trade here, my confirmation trade here. Obviously, the less stressful is just trade confirmation and don't force a trade, right? So I see a case for support, and this July to August swing from last year still provides some support, and see if this wants to come back up. Could this be a bit of a relief rally with showing some risk appetite? Sure. This could be a risk appetite, right? Japanese yen gets weaker. Hold these August lows. That would be an interesting trade. CAD yen, similar, right? Testing the lows, but no confirmation to buy this yet. So don't call the bottom. Look for a trend line break here. Look for a trend line break here, and see if price wants to turn. But don't call a falling knife if this thing's going to continue to drop. If we have risk off trading, we're going to see a stronger yen. It's kind of always the case. When we have true risk off trading, you're going to see the Japanese yen get stronger. So this is why I continue to be long these shares and this, so I can just trade options as opposed to holding negative swap in the currency market. Swiss yen, this one you have kind of two safe havens duking it out, so I'm out of this trade. Euro yen, Euro's made a big move to the upside. This is like the only pair that has been holding this low, right? Every other yen pair, Aussie yen near the lows, CAD yen at the lows, Swiss yen near the lows, Euro yen because of that bump, weaker dollar and the big surge in the euro. We've seen this one hold the levels around 155.50 and bounce up about 500 pips. Again, if you're watching support, it does behave. I wouldn't be shocked if other currencies kind of did that, where we hold these August 5th lows of last year, but look for confirmation on smaller time frames. Pound yen, this one is a chop fest. Pound yen's not anywhere close to this August 5th low. This one is extremely tricky. So I don't want anything to do with the pound yen. New Zealand yen, we're also back down to the lows. We're going to see if this risk appetite actually holds. This one is actually right around the flash crash lows. Trend line break, have we had it yet? No. There's a trend line. There's a trend line. So if you're looking to take some bites out of this, maybe some confirmation of holding the lows and stop loss below, and then higher lows and higher highs get us back into some of the structure here, maybe pulling back in the same area, right? But waiting for confirmation to see if the coast is clear to take that trade with stop losses below that you can move and trail along the way. Okay. All right. Other positions, Aussie CAD finally starting to show some better signs of life. I'm bullish on this one. Aussie Swiss still holding. Aussie New Zealand back down to break even. I'm just going to hang on to this one a little bit longer. CAD Swiss, I did ugly. It's a good spot to be adding. I'm going to put in another position, wait for a trend line, stack up some more trades, and try to get back to around 6,400 on the CAD Swiss. Again, trade small because this one has no signs of being the bottom yet. Fiscal policy, Sarah. That's why Euro's ripping like crazy. It's the first time in years that probably since like kitchen sink monetary policy with Mario Draghi that the Euro's actually had a lot of attention. But you're coming out with like government spending for the first time in a while. I'm trying to think what the phrase was. I was listening this weekend to a podcast. I think it was basically the belt buckle was extremely tight for the Eurozone, and now they're starting to loosen it. So your fiscal policy is starting to sprinkle into the markets. The markets are liking it. You've got your indexes up, your euros getting a lot of momentum, and it's been surging pretty aggressively. But it's been mainly fiscal policy for the first time in a while. CAD yen we just did, Swiss yen we did, Euro Aussie. I'll take a couple of currency pairs. Good Lord. I don't know what to say on this. This thing has ripped to the upside. There's so many bullish candles here. I don't want to be buying this. I think this is a terrible position to call the top. I think this is a trade you can't buy the highs. You have to remember, look, currencies are not like stocks. So when you have a rip like this and it is so one-sided, this is up 1,100 pips almost. 1,055 pips in what? A couple of weeks? Like, that is insane. So what I would do is I'd look at a fib, start from a low, go to a high, and look to see if there's any pullback here that you could buy in and see if there's some continuation. That's about it. Like, this is insane. This is not typical. This market hasn't been this decisive since we had this run during that July to August risk-off event. You'd almost think there's a crazy risk-off event happening, right? I mean, in a way there kind of is, but wow, that's nuts. And because we had equal lows, I'm just really surprised that this swing was not just finding some resistance, but it just blew right through it. So it's kind of crazy. And this is, Euro Aussie and Euro CAD, right? Look at this thing. Euro CAD to the upside, up over 1,100 pips. Euro New Zealand, same thing here, up 1,000 pips. Pound Aussie, 97 to 206, up 1,000 pips. Pound CAD, up 1,100 pips. Pound New Zealand. I mean, when I used to see trades like this and be like, oh my gosh, I totally missed it. I mean, no, this is not the same currency. I mean, this currency from pushes and pullbacks, highs and lows, reds and greens, it's fairly balanced. And even when the market goes up like this, it comes back down. So this is why I just can't justify like jumping in and chasing this thing. It's obviously a terrible sign to call the top. You don't want to fight this momentum. But I'm not buying this thing at the highs, because at any point over this move, this surge, we're probably going to have some type of pullback. Now that pullback could be here. That pullback could be here, right? You can just drag a fib and look to see, okay, roughly speaking, where is a decent pullback? So I'll just say that that's hypothetically my high. Well, if I get a shorter time frame area that starts to roll over into some sell zone confirmation, then I can have a trade that pulls back to maybe 7,160, maybe 7,100, maybe 7,000, and that'd be about it, right? For a pullback. I mean, don't be greedy. If you get a pullback to cooperate and you get 200, 300, 400 pips, great, good trade, and just get out of the trade. But that's if you're confirming on a lower time frame. Otherwise, if you want to be thinking this is the momentum to the upside to buy a dip, then you're looking for these to be swing levels to build a position to see if it can retest the high. But I don't chase this stuff. It's silly to chase it, stupid to chase it, so don't. But these moves have been pretty outrageous and kind of non-typical, But that's the nature of the game. Like, it does some stupid stuff sometimes. Pound dollar never broke the trend line, never forced a trade. Now I'm curious if the dollar continues to weaken. My play on the dollar would be let this thing fall. I'm already late. I'm not selling the dollar right now. But if we fall into some support, there's obviously some levels here around 101 to 100 to see dollar strength. New Zealand CAD looking better. Long in New Zealand CAD, hopefully getting back to swing highs around 8,800. New Zealand Swiss I did. New Zealand Yen I did. New Zealand Dollar I did. Dollar CAD, anything here? I don't know. This dollar CAD stuff can be tricky. This is a super slippery pair. I feel like this trade for me that I went from like 134 to 145 or so, that trade was probably my best trade in 2 years on the dollar CAD. Because before that, I couldn't get a fill to save my life. Because all I was waiting for was, I bought some here, made some money, sold some here, made some money, bought some here, made some money, and then I just waited, right? I sold some here, and then I just waited, and I never got filled until I'm like, well, I'm going to start scalping. So I started to build, but I mean, I waited for an entire year to finally get this trade to set up. And now I'm like, well, I mean, we hit a 2020 high and a 2016 high. If this is any type of topping pattern, I could see there being a swing back down to this level. But based on this move and consolidation and move, if we have any additional pullback, I think this market's still going to go higher. I think dollar CAD can still go higher, but we're also talking about dollar CAD potentially reaching, all-time highs on the retail chart, which is back to like 160. So we'll see. Euro dollar, if it's above 106, I think it's still bullish. But look at, I mean, again, what do? I'm not going to chase this thing. This thing just surged from 103.50 to 109. So if there's any pullback, I mean, there's a lot of inefficiency in here. One of two things: either we get a pullback on the euro dollar to get long again, right, and try to take out this or challenge this 111.50 to 112 level, or this thing just screams and screams and screams, and we find resistance, and you can sell the crap out of the euro dollar at 112. If we have confirmation, look for it here, sell it at 112, get a nice high to form, confirm it, and then you can sell it for anywhere between, a couple hundred pips on a pullback to maybe even a 106 retest. But this is moving very inefficiently. It's pretty simple. Like, this is a crazy inefficient move. If there's more to that, this is likely going to be pulling back. So, I mean, it's it. Like, there's lots of chop in here. We've clearly seen a nice range the last couple of years between this 112 and 106 handle, even 112 to 105 handle. So I'm not necessarily like super bullish, but I would say because we're above 106, I'm not bearish on this. So if this is up, 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 you can go to smaller time frames and try to find some precise entries. Otherwise, excuse me, this is my resistance level. We confirm resistance there, let it roll over, and then see if we get a nice trade. But there's going to be some slop going on. All right, SPX, come on, dude. This thing has to be freaking close to profit. SPX trading at 230. Good Lord. These trades are taking forever these mornings. All right, hopefully I can get 50 cents out of this one. And then my SPX trade defended at the 55.30 level. That'd be nice to see it hold for the day. All right, we get on those pairs, currencies. Let's do a couple other things here. UNG, I'm still long natural gas. Gold, 29.15. Gold hasn't really done much. That's okay. This one been one of the surprising, like, kind of mundane trades the last couple of weeks with all the excitement of the index is selling off. Gold has just stayed pretty resilient. I'd still like to see a bit of a dip on gold just for better buying opportunities. I still like silver, which right now is getting this slight nudge, which I'm happy with. So still comparing gold versus silver. If this continues to head down, that's a good play for silver, which is why I'm still long on both, but I prefer, technically especially, I still prefer my long on silver. See if we can get up to some fresh highs. Bitcoin, lots of chop. Past resistance around the 75K mark. Let's see what price does to respond to that. If this resistance becomes support, I think this is still too early to call the bottom. I wouldn't be surprised if this market just gets really ugly in here. But if we can get free and clear and hold this 75K support and not do too much damage below it, I want to see price on Bitcoin respond to that level. Right. And I think that would be a bit of a bottoming pattern. If we have risk on trading, like that could be an excellent move on Bitcoin as far as the technical trade this year. So if we have some response to this 74, 75K zone, and we can break this trend line around, I don't know how fast it's going to move, but if we just consolidate, we get a nice move to the right side of the trend line. I could see us going from 80,000 back up to, 105, 110. If we break some highs with the momentum, I don't know. Do we have to see all-time highs in the S&P and the NASDAQ in order to get Bitcoin to all-time highs? I would imagine yes, but anything's possible. Okay, MicroStrategy. Let me see where my profits are at for these covered calls that I'm in. It might be worth it just to roll it down or take some profit. MSTR here. Okay, this trade is income for this week as long as Microsoft stays above 375. $1.20 of income. Hopefully that stays where it needs to be. MicroStrategy, my collar trade, got about 65% of the premium sucked out of this thing, up about $4,000 in that covered call. I could and should. Let me see if I roll this thing. I'm curious if I roll this thing down. If I roll this to an earlier, I want to go back in expiration. So if I roll this back, down, Nope. I'm just gonna let it decay further. So if we get a decent surge, I mean, and this thing is crazy volatile. I mean, it was up here to 321, which would have gotten called away. If we have some stability here back in the 240 to 200 zone, This isn't a bad spot to look, this area, or even looking here for like a bull call spread. Not a bad spot to get long. I'll watch this one for maybe a defined risk trade. Coinbase 189, needed to stay above 190 or so by the end of the month. Hopefully we have a decent little risk on rally, even short-term rally, give Bitcoin a little bit of a run, give Coinbase MicroStrategy a bit of a nudge. Copper still looking great. This copper trade is looking for full profit, hopefully in the next 30 to 40 days. Japanese yen, Nikkei, DAX pulling back. This is fine. I wanted to see a pullback on the DAX. It's happening. I'm going to start selling some more premium on FEZ, which is my Eurostock ETF. FTSE dropping a lot harder, so I'm going to stick with Eurozone right now, stick with Germany. Argentina also pulling back. Maybe. I was to say maybe, maybe not. China still hanging above those September highs. Brazil's fine. Mag 7 for the first time today, not necessarily breaking fresh lows. Are we getting another freaking push, dude? Stop fucking going down. So checking some levels here. Hopefully we see some stickiness around this like 558 level today. If we see fresh lows, I'd like to see a bounce. I'd like to see market makers do their job today and keep things relatively stable. Yesterday was not that day. Yesterday was gap lower and flush lower. One of the worst days we've seen since 2022. So it was a painful day, painful trade. This like nearly 10% slide is still happening. So if we're just going to keep testing lows, I just want to see if this thing bounces around. But don't get sloppy on me. All right, we'll see what happens. Apple. This is Mag 7. So Apple income trades all the way back down here towards 205. This is only out to next week, so a little income trade here. I do have some wiggle room. I wouldn't take any shares of Apple until it's $200, which if I did take shares at $200, it's still a pretty decent discount, at least in a corrective manner. So high, low, lower, high, lower, low. If that was the case, take on some shares, try to repair that for a couple $1,000 hopefully, and then same thing out to April. Even the strike's a little bit lower. This would be a 185 if I'm taking on any shares. Amazon off the lows a little bit. I'm going to just keep it in there. I've got a next Friday expiration, a 200 by 195 ratio spread. AVGO choppy since earnings. Google just leaking a little bit lower, but still like these income trades. This one, it has to be all the way down to 145 in order to take any ownership here. My break-even would be 145. VSCO, I don't know what that is. I'll take a look at that one. Clearly I set a chart alarm on it. So I like my Google levels. Meta, I talked this year like it's probably coming back to the 200 moving average, and it is. This has been a really nice way to be bearish on Meta. It's down $150 from the highs. I had bear call spreads and some fancier strategies that I just said, as long as we, don't go higher than like 750, 760, there's money to be made. So that's all worked out pretty nicely. Am I interested in buying Meta? I think in the near term, yes. Like the near term trade on Meta could be an easy bull call spread. So that may be something I put on in the next maybe week or two. But my concern is that this just becomes a short-term bounce and then more pain. But I don't know. I think Meta at the 200 is going to offer up some profitability. And if I get that, I might just do a simple, debit spread. So I'll watch this one. Let me set a chart alarm. Let me just set a chart alarm here on the ad alerts. And once we tap that 200 moving average, then I will look to take a debit spread. So delete that and just set the alert. Only once, it's fine. Yeah, just touch the old moving average. I don't know why it does that, but okay, that's Meta. Microsoft. I've got some income running for this Friday. If we hold above 375, which so far so good. If we stabilize these lows, that'll be a little income trade for this week. Netflix, still looking for another trade to pull back. So if we go pull back here and then flush down, I don't mind scooping up some Netflix in the 700s. I'm probably just going to use the dollar cost average position. I have a trade out to next Friday for $2.56. So if we stay above 655, which I'm not really worried about that trade, but that should be a nice little income trade for next Friday. NVIDIA 106. If we can, again, kind of stabilize here, stop the bleeding around this like 105 to 110 level, maybe a short-term recovery back into the 115, 120 handle. This one's out to April, so I'll keep an eye on that one. Tesla, probably one of the worst stocks, where it feels to be one of the worst stocks this year, down 56%. For what was loved post-election is now just like a dumpster fire. I mean, I measured out the technicals. We, surged through all-time highs. I get it. It's volatile. It's overvalued. It's trading for a high multiple. I understand. This one is out to next week. If we get a push, I'm going to put a chart alarm here. It's a 255. So if price is greater than 255 by next week, then I don't have any assignment. If it is higher or it's lower than 255, then I take a break-even trade around 247. Do I think I can repair the stock? Yes, I do. If I take the ownership, I'll repair it. Probably look at repairing the trade for a couple $1,000s. Not looking to own it long term at all. This trade especially, I think having cash at the ready. This is what I talked about with de-risking. This is one of the trades that I want to be de-risking. So if we get a rally back up towards 250 to 255, then I'm hopefully going to avoid the assignment. If I have the assignment, that's fine. I'll flip it for a 2 to 4 week expiration covered call, and maybe even consider selling one in the money that just lowers the cost basis dramatically. Berkshire probably pulling back from all-time highs. Bond market had a decent pullback. I don't really have to do anything yet. I rolled out some calls on my diagonal spread to April. That's above $92. I'm just going to let that one marinate for a second. Fed funds rate. We should have a release this week on the 30-year mortgage. I think it's actually tomorrow morning. If we go to economic calendar, 7 a.m., you are going to see the 30-year mortgage rate coming out. This should be from, I think Fannie Mae, Freddie Mac, something around the like 6.63 was their official one last week. But we don't have a new forecast or anticipate. They just print it. So I'm just curious what that reads, and then this chart will show something. So we're currently trading around 6.63 for the 30-year. The 10-year yield has fresh lows of 4.10. We're kind of hanging out at 4.22. Just anticipating some mortgages. This was around 6.05 for the 30-year. This is around 7.05 for the 30-year. So it makes sense that we're probably going to look at a release around 6.5. It's obviously better. I don't know if the 10-year continues to drop. I kind of hope that it does, for the sake that I'm closing on a house in May, but we'll see. And then some other stocks. JNK, I'm just looking at this one. This is probably not a great sign. This is why some of the bid mid-ask was a little bit off this week. We are seeing this finally starting to pick up some steam to the downside. I do want to keep a close eye on this. This is an important thing to watch when it comes to liquidity in the markets. Okay. Anytime we've had some very risk-off, very scary times, this instrument has been dropping. So 2022, yeah, not good. Okay. And that's really the last big scare. I mean, 2022 into 2023, like pretty stable through that correction in September, October 2023. We bottomed out in 2023. It's been surprisingly stable in here so far, but I am keeping a close eye on this to see. Let's make sure we're not really breaking any structure on JNK. And then LQD is another one similar, just making sure this thing isn't like falling off a cliff. So hopefully we see and maintain some liquidity. China stocks, Alibaba, Baidu hanging in there at 94. I've got collars into April at 100, 105. If it gets called away, that's a nice chunk of profit. Still hanging out towards the September highs. $40 and change on this one. Okay, out to March 21st for a $40 covered call. Schwab dividend, I still like it. That's a nice pullback. This is a good ETF this year. In fact, I mean, it's cheap enough. Here is SCHD holdings list. That's perfect. I looked it up before. Here you go. How many names do we have? We have 103 names in this Schwab dividend holdings. So weight-wise, it's still weighted. You've got some big players in the top. Home Depot, Verizon, Cisco, BlackRock, Pfizer. I mean, some of these weights are pretty good. These are solid, consistent dividend companies. Yeah, not bad. All right, just got closed out for 215 in SPX. Thank God. Only took an hour and a half this morning. Okay, so that was a nice little winner. All right. So update SPX DPP this morning. $2.65 credit, close 2.15 debit. Profit target hit. And if we stay above 55.30 on the SPX today, then I will get another $1.20 out of my broken wing butterfly. Another $1.20 right here of credit on the day, which will feel pretty good. Market is making a little bit of a run for it. So I've got some P&L, which is finally starting to show some green. Kind of a, shitty couple of days to see 195K turn to zero. Open positions, so it's not like I'm taking on losses, but that's a big fluctuation in P&L, which has not made me super happy for the last 3 or 4 trading days. That being said, though, stabilization is hopefully coming. If we stay above, I've got one level here that I'm watching closely on XSP. If we stay above 560, that is good things. So greater than 560, I'll be very happy. Greater than 550, I'll be very happy. Greater than 540, I'll be very happy. These are all within the next 30 days. So watching trades on XSP, which is your mini SPX. Any other stocks I wanted to review today? Not really. I think the big takeaway is going to be tomorrow's news. How do we react to tomorrow's news with inflation data? Are we putting in a near-term low at all? This is one of those situations with CPI that the market in the past has had CPI where we gap higher and we just rip off of that, and that could be the start of this rally. We might see the market, gap lower and then have a gap to fill. Either way, I'm just gonna say this for my personal trading. I'm still looking to be pretty bullish tomorrow on CPI. I don't necessarily want to be heavily positioned before it, but I don't mind the trade looking at, I'll post a trade I've got an SPY trade that I'll post in my Pulver alerts. But I'm basically looking out about 30, not even that. I'm looking out about 10 to 20 days. 10 to 20 days. If I can play just a little bit of a gap fill, any type of recovery here for the next 10 to 20 days, I'm just looking at a short-term game. So even if we go gap higher and recover or gap lower and fill, I'm still looking at positioning for some type of short-term rally. And like I said, any short-term rally is a risk relief rally. So if this happens, okay, take advantage of that for some short-term profits, which I hope that I can. And when we get back into some questionable levels, like, is it possible that the market goes higher than this? Look, I'm not going to beg the market to go back to all-time highs. If it does, pleasant surprise, and I'll have full recovery. By the time, this is what's crazy, is by the time we get to probably here, I'm probably going to be back at my high watermark for the year at 195K. So if we do get to all-time highs, this is why it's important that I de-risk, because if I'm getting near all-time highs where I think this is a de-risk area, if we surprise to the upside and we make all-time highs, well, that's fine, because this all of a sudden swells to maybe 250K or 300K in profit, which is great. But from there, it's like I'd still be looking at the same nonsense of maybe this market is just a freaking chop fest this year with all sorts of wild and crazy stuff. But I'm looking for a short-term rally. So anything around the 5,800 to 5,900 window, I'd say max to the upside. If you're still looking at this resistance, we about 6,000. Anything from there, I would say I'd question the bull's ability, unless all of a sudden there's all sorts of clarity out there on tariffs and what we are or aren't doing, whether we're delaying, whether there's concessions, whether we're reducing. I don't know. If that starts to come more in light, fine. Also, next week, we have the Fed. So we have CPI data this week. That might also entice the Fed. And I don't think they're going to make an emergency cut or anything. I think they're still going to pause for this month. But the probability might shift into a maybe even a May or June cut. So we've already expected like a high probability for June, but now the probabilities continue to shift where June, July, and September, 3 cuts for the year, and it's stacked in a little bit closer together. So, here's one thing that's pretty easy to telegraph. If the Fed mentions like a big improvement of inflation, and again, they're very careful on their language. It's Jerome Powell's press conference, but if just watch the tool. Watch the CME watch tool. Look at the probabilities. Does this shift at all? In fact, I'm just going to go ahead and take a screenshot of this right now, just so we have a reference point. So Fed watch tool on there it is. Okay, so this is today's date, March 11th. March 11th, 2025 at 11:14 a.m. Eastern Time. So will CPI plus PPI change the Fed for March 19th FOMC? That's the question. Fed watch tool, March 11th, pre-FOMC. All right. So just a question. Does it change at all going into this week's data? Is the inflation improving? This is why I'm considering that we might have a better than expected CPI and PPI combo, because we have seen this thing drop to lower than the September levels. So that would be lovely to see some inflation making some big improvements. And that's why I'm also wondering, based on the timing of this, forecast for 2.9 year over year. If it prints 2.9, maybe the market likes that. If it prints 2.8, 2.7, maybe the market loves it. All right, that's what I'm watching for. So for tomorrow's news in the morning, 2.9 for the headline CPI, that's year over year, and 3.2 for the core year over year. If these are both improvements, I think the market might like it a little bit. And if they're decent improvements, like 2-3 tenths under what's forecasted, the market might recover pretty swiftly. And we'll see what the Fed changes as well. Okay. All right, sounds good. All right, buddy, I'll let you go for today. Back at it tomorrow. CPI news coming out at 8:30 a.m. Let's see what happens. Markets are relatively calm today for the first time since whatever. I wouldn't say Friday was calm necessarily, but it kind of was. Yesterday was. This is 2 of the wildest Mondays I've seen in a long time. Having a 1% plus gap and a 1+% flush. That rarely happens on Mondays, especially. And the week before that, the previous Monday was just a crazy gap up, and it flushed down like 2 to 3%. So anyway, I still like the levels we're at. I'm taking some short-term buys, and I'll post that in the poll roller. Should see that for the next 10 to 20 days. All right, we'll see you tomorrow. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below, or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.